You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Friday, May 10th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. The first thing to know is tariffs take effect. The increase in tariffs to 25% from the previous 10% on $200 billion of Chinese goods went into effect at midnight, officially 4:01 Greenwich Mean Time Friday. China immediately vowed to retaliate but gave no immediate details of its plans. While politicians and economists have suggested widespread economic damage will follow, some analysts argue there's still time for the two sides to reconcile. The fact that China's Vice Premier Liu He will remain in Washington for a second day of trade talks was seen as an indication that both sides are still determined to reach a deal. The U.S. has decided not to apply the increase to goods already on their way. Goldman Sachs chief economist Jan Hatzius downplayed the threat of yet another escalation in the trade war, saying in a note that there's only about a 30% chance that U.S. President Donald Trump will slap tariffs on the roughly $300 billion of Chinese imports that aren't yet targeted. Chinese stocks soar, and U.S. futures are cautious is the second thing to know. Fears of a full-blown trade war have wiped $20.5 billion off the balance of global stock markets so far this week, according to the latest figures from the Bank of America. The cash leaving stocks in the week to May 8th was the third biggest outflows so far this year, the bank said. Chinese stock investors seem to have taken the increase in tariffs in stride as the Shanghai Composite ended Friday's session with a 3.1% surge amid some speculation that the state-owned actors had been intervening to support prices. Even after Friday's jump, the index fell 4.5% this week, allowing analysts to depict the late rally as a bounce from oversold levels. European shares were also upbeat on Friday, with the Euro Stoxx 50 up 0.8% nearing midday trade. The region's stocks are still on track for the worst week since the start of the year. The third thing to note today is Uber goes public at the low end of the price range. Rideshare company Uber Technology, NYSE ticker UBER, played it cautious, pricing its IPO at $45 per share, at the low end of its expected range of $44 to $50, despite bankers claiming the offering was oversubscribed. The company, which begins trading Friday, still raised $8.1 billion and is valued at more than $82.4 billion, but underwriter nerves were evident after the struggle of Lyft since its IPO. Uber is basically Lyft 2.0, good model, growing sales. But yet again, here comes California math once more. It's still losing a ton of money, said Brian Hamilton, a tech entrepreneur and founder of data firm SageWorks. If you buy, you're buying a bull market, not a company, he warned. The fourth thing to note today is inflation is expected to top 2% again. Inflation numbers will be the market focus on the economic front Friday, a test of the Federal Reserve's assumption that recent soft readings are transitory. The Labor Department will issue the Consumer Price Index for April at 8:30 a.m. Eastern. On average, economists expect the CPI rose 0.4% last month, according to forecasts compiled by Investing.com. The year-on-year rate of inflation is expected to nudge above 2% for the first time this year. The core CPI, which excludes food and energy prices, is expected to have risen 0.2%. Data released Thursday showed that the Producer Price Index rose less than anticipated in April. And the fifth thing to note today, oil prices pair gains amid trade dispute escalation. Oil prices paired earlier gains on Friday after U.S. President Donald Trump's tariff increase on $200 billion worth of Chinese goods took effect, escalating the trade dispute between the world's two biggest oil consumers. Prices came under pressure after news that Iraq, one of the biggest oil producers within OPEC, produced above the ceiling agreed in the so-called OPEC Plus output restraint deal in April. Elsewhere, Reuters reported that two of China's biggest oil buyers, Sinopec and CNPC, had declined to buy Iranian oil this month, fearing U.S. sanctions. U.S. crude oil futures gained 48 cents, or 0.8%, to $62.18 by 5:38 Eastern, while Brent oil traded up 53 cents, or 0.8%, to $70.92. Our next story today is from Investing.com. Fed seen as more likely to cut rates after Trump boosts tariffs. The Federal Reserve probably will be more inclined to cut interest rates now that President Donald Trump has followed through on his threat to increase tariffs on U.S. imports from China. But it won't rush into doing so. While the higher levies will put upward pressure on inflation by raising import prices, the central bank will likely be more attentive to the potential drag they'll exert on the economy by depressing consumer and business spending, Fed watchers said. We would expect the Fed to initially focus on the growth implication and look past the inflation impact, Michael Feroli, chief U.S. economist at J.P. Morgan Chase & Company in New York, said in a May 7th note to clients. And that, ladies and gentlemen, is news you can use for today, Friday, May 10th, 2019, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a great weekend.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.